Hey everybody, so internal audit then. Remember, internal audit are provided by the company themselves. The company pay them, and so really the issue here is how independent can they be? So independence will come into this again a lot. Um, First of all, let's just think about what they do. They choose a system. They choose a system to look at. That system could be inventory, could be sales, could be whatever, and then they report on it. Okay. To see whether it's working effectively and the outputs are what they should be. So that's what they do, and we're going to be doing that as well on the course. We're going to be doing that in the exam, choosing a system and reporting on it. So really important. That's what they do. So I'm going to look now at when they do this. Then they provide assurance. So when they provide assurance, what do they provide assurance on when they choose this system? Okay, and they provide assurance that the system itself, whether it be sales system or whatever, is working effectively. Everybody's getting invoiced in time, the money is coming in, etc. That the internal controls surrounding that system are effective, and that the procedures are followed. You remember, you can have great internal controls on paper, but they need to be followed. And therefore, what should happen is that the information that the system produces, or the output that it produces, should be reliable. You want your debtors and your sales figures to be correct. And they also can provide assurance on corporate governance. So this is kind of outside the choosing a system. They could just make sure that our corporate governance as a whole is following best practice. Okay, so all good stuff then. So we need to kind of let them do it properly. How can we make sure that they are effective? Okay, what affects their effectiveness? So, as we said, well, the big issue really is to get the job done properly, because they're paid by the company. To get it done properly, they really need to be independent. So how can they become independent? Few things. The head needs to be senior in the business, in the company. Okay, so in the exam, look for that. Is he senior in the company? He needs to have some strength in the business. Okay. Secondly, you want to look at the standing in the company. All right, so are they respected within the company? Do people act on what they say? And finally, they should offer a whistleblowing opportunity. So people are able to whistleblow, they are able to criticise the board in whatever way they need, okay, and not worry about being sacked or whatever. So they're the three things that will affect independence. The other thing that will make them effective to make sure that they do all their jobs well is that they have to be well resourced, well paid, enough of them. No good being in a multinational company and having two people in your internal audit. They need to be competent. How can you tell whether somebody is competent? Well, they should have passed their ACCA F8 or whatever it might be. So qualifications and experience in terms of competence, and that they work hard, that they work diligently. And that will be through how they're managed, how they're organised, okay? And so what I thought I'd also do here is put some limitations, some things that you look for in the exam. And obviously they're going to be the opposites of the effectiveness, really, aren't they? So what to look for in the exam, because remember I said that you're going to have to do this, and you're going to look for why they aren't as effective as they should be. And the things to look out for is that the internal audit reports directly to the finance director. So all these are things that shouldn't happen. You shouldn't have that. You shouldn't have the internal audit department reporting directly to the finance director, and that's who you're criticising, basically. So again, the audit committee should sit inside there. So that would be a limitation. If that was to happen, you'd say, look, that would reduce their effectiveness. Okay. The internal audit head may be appointed by the financial director. If he's appointed by the financial director, again, the financial director could just be getting one of his friends in. So they shouldn't be appointed by the financial director. They should be appointed by somebody independent, such as The audit committee. There should be rotation of staff. That's the other thing that you're looking for. So I guess here I put no rotation of staff would be a limitation, wouldn't it? Because if they're not rotating the staff, then they're not going to be as effective as they used to be, because a fresh pair of eyes and getting used to the people in the department, maybe becoming too friendly, they're all limitations. They will affect your independence. Okay, so they're the sort of things that you're looking for. Also, I guess as well, maybe if it mentions the work that you've got to do, the scope of the work, if that is set by management, it shouldn't be set by management. It should be set by somebody independent, again, the audit committee. Okay, so they're the things that you're looking forward and say, well, that's not quite right. One other thing that I thought I'd talk about here is the outsourcing of this department. So you could outsource internal audit. Let somebody with expertise look at our sales system, look at our inventory system, can they be improved, etc. And that's going to have some positives and it's going to have some negatives. So the positives would be, should be cheaper, because you don't have to have full-time staff, do you? Should be cheaper and therefore more efficient as well. They're only going to come in at certain times, do their work and get out of your hair, really. They will bring in expertise because they're working at all different companies. They will take it from across industries as well as within your industry. They should know best practice. They will be up to date with what technology can offer. They will be up to date in methodologies. They will, of course, as they're separate, they should be at least, they should be independent. So we'll look at that in a bit more detail in a second. And finally, if they get things wrong, you can sue them. So we transfer the risk. Okay, the risk is transferred over to them. The downside, though, of getting rid of your internal audit and getting a big accounting firm to come in and do it, there is this independence problem. There is a conflict of interest, really, because they want to please you, because you are effectively paying their wages. So how independent will they actually be? Which is why I said there's an independence as a pro. Maybe it's not, okay? There could be cultural issues as well. You know, when you have people coming in from the outside and the way they deal with you and the things that they're trying to implement might not be suitable to your form of business. Okay, and linked to that, I guess, as well, is that you start to lose control as a business. You start to lose control of your systems, etc. And that could be quite scary. Outsourcing your internal audit department, and then finally, it's the blurring, they call it, the blurring of the distinction between an external auditor and an internal auditor. And this is on behalf of the people working there. So imagine you're working in this company and you don't really know anymore who's the external auditor, who's the internal auditor, because you've got these people from the outside coming in and asking to look at your work all the time. So there's distinction, there's a blurring of the distinction between external and internal. So how can we safeguard it then if we do go for it? How can we try and make sure it works as well as possible? Well, it's all about your contract, really. Make sure that your contract is exactly what you want it to be. Make it clear. Make the scope of what you want them to do. Make that clear. The responsibilities of the outsourcers. Make sure that you get what you expect. Make sure there's no expectation gap. And obviously as well, build in regular reviews with them. And there could be safeguards to make sure that if you do outsource, it goes well.